Welcome to Market Matters. I'm Khoo, Chuang, and I'm joined by Sulhi, Azman. And today, the world is on fire, Max.
The world indeed.
Bomb blast in Istanbul yesterday, explosions in Jakarta today, operations in Sydney at the Opera House. What the hell is going on?
I have no idea, Chuang. I think that a lot of, the world is getting into a place where it's becoming unsafe and terrorism is getting more and more worse than ever.
Yes, indeed. And the thing is, the Malaysian stock market actually did drop some points, but not by a great deal, considering all that's happened. The KLCI was down by just 9 points, or half a percentage point, to 1,633 points. Volume 2 billion shares, value 2.1 billion ringgits. The downers were Petronas Chemicals, EG and Inari. Uppers were ES Ceramics, more on them later. Bio Holdings, as well as NTPM, the tissue maker.
Well, this is in line with the regional and global declines. KLCI pared down 3.5% this year, as contrast to the 16% plunge in the Shanghai Composite Index, as well as the 10% of the Nasdaq. And if you look at the regional market, Chuang, we have Jakarta Stock Exchange down 24 points, so just half a percentage point, to 4,514 points, while Shanghai Composite Index was up 58 points, or 2%, to 3,008 points.
Well, there was once a time when stuff like this happening on the bomb front would have seen markets plunge, but today, because of the number of black sky scenarios and and conflagrations, people are just like, oh, how many people died? Only 6. Oh my God! But it's a bit of we're a bit dead to the news now. So be that as it may, the Jakarta Central Bank has actually cut benchmark interest rates by 25 basis points to support sagging economic growth. And I'm not sure whether the rest of Asia will follow suit, because in Malaysia, we're not sure whether we should cut or we should start to raise to compete with the American Federal Reserve.
Well, this is in line with the divergence monetary policy going on in the Europe as well as in the country. But we'll see how
divergence, as it were, right?
Yeah,
because the rest of Europe is easing, America is tightening. We don't know whether we should be coming or going.
Yeah, we are hanging in the balance. And just before we wrap up, Chuang, the oil price today is still hovering $30 US dollar per barrel for both WTI and Brent crude. And we wonder how low will the oil price go?
How low? Well, $30 if you believe Goldman Sachs. They mentioned some years ago, but of course, Morgan Stanley talking about $20 a barrel, primarily because of its high leverage to the US dollar. So it is what it is, and we'll be keeping watching brief on it. Let's move along to Hotstocks and ES Ceramics Technology Bhd. We've talked about this in the past. These are a company which is a very, very small cap firm. They've been in business about 17 years. They do hand formers, the ceramic hand formers for initially the surgical glove business, but now they moved into the rubber glove business, and they are seen by now as a proxy to that very, very stellar sector, rubber gloves.
Indeed, they are riding on the growth, and today the ES Ceramic closed up 5 cent, or 9.35%, to 58.5 cent. And Chuang, they are actually, indeed, what you were saying, they are riding on the growth of the rubber glove. For example, Hartalega, they are supplying to Top Glove and so on. So, and these companies is going to be enjoying some good rides, given the fact that US dollar is appreciating and boosting well for them.
Yeah, exactly. So it wasn't that long ago that they were making losses, but ever since they transformed into this sector, proxy to the rubber glove sector, the advanced buying, maybe the rise in today's share price and in recent days has been perhaps advanced buying, because they will be reporting second quarter earnings at the end of this month. They had a nice Q1, and if you take the earnings, the strong earnings from Top Glove and Hartalega as any kind of indication, because the last quarterly earnings from Top Glove was a record number, it should be a good quarter for ES Ceramics as well. They're doing about 150,000 formers a month. That's equivalent to a full month's glove former orders by big glove makers like Top Glove and Hartalega. So these are leaders in their field, and the proxies should do well as well.
That's right. And just last year, when we were covering the stock before, the CEO has been saying that the company is thinking to, he wanted the company to move to the main market at least in the next 3 to 5 years. And, this is going to be a big boost for them given in the long run. But they still need to catch up on a lot of things. For example, the requirements, market cap of 500 million, and, and ES is about, 120 million-ish. And there's a lot of things to be done there.
Of course, currently not cheap anymore, about 20 times earnings, but they'll be reporting in 2 weeks' time also. We'll see how those numbers are. So to summarize, ES Ceramics, proxy to the rubber glove sector. Secondly, the gains today and in recent days may be advanced buying ahead of anticipated strong earnings due the end of January. And thirdly, the recent earnings strength at Top Glove and Hartalega are lead indicators potentially of ES Ceramics' quarterly earnings. Let's trot along, Max, to Seal Incorporated Bhd. Now, this company closed down 0.5% or 1% to 16.5 cents this morning, or rather this afternoon, pegged as positive momentum by the Edge Research.
Yeah, and the stock has risen by 22% since the start of this year from 49 cents. And it's a Perak-based company, Chuang, listed in the main market and classified in the real estate. A lot of business going on there, commercial leasing, for instance, renting of shop lot spaces in Kedah, Penang and Selangor. They have mall management, isn't it?
Yeah, so their main business, about 7 out of every $10 they make at the top line level is from Selayang Mall, which is where their main business are. But the thing is, the last year, for financial year ended June 2015, they had losses. But in the first quarter this year, quarterly earnings have seen a four-fold jump in revenue, a tenfold jump in profit after tax. And the reason it's happened, there's a project called Queensville in Cheras, which has seen their property development segment rise. And they expect property development, not mall management, property development to be the earnings contributor for the year.
Correct, and this is, I mean, might be one way to diversify their revenue base, for instance, because 70, as you rightly pointed out, 70% comes from the mall management, and the property development. They have also projects in Kedah, Kelantan, KL, and Penang, but they interestingly have something called timber-related activities, doing some logging, sawmilling, plywood supplies, and so on. But still, I guess, still in a very small contribution to the revenue.
Yeah, and transitory, of course, when you look at Jakarta and Ta'an, that's not a bad business to be in, given the strong dollar. But property, if it works for you, why not, right? Why kill the goose if it's laying eggs? So to summarize, the Queensville property project has helped the company to turn a profit in the first quarter from a full year loss last year, Max. Secondly, property development will drive earnings in financial year 2016 from mall management last year. And thirdly, indicates that development will be the earnings mainstay from here on in, from mall management, which is currently 70% of revenues.